Hey Borough Bros, I hope you're having an awesome day today. It is me, your Murfreesboro, Tennessee real estate Sherpa, and today's video is all about cash.
So I can start a big flex, laughing on the way to the bank to cash them big checks. You can see me still up in my apex. I'm the future digital, you niggas some A-tracks.
Cash. So let's say that you are a buyer, you want to buy a house like this one I'm standing in right now, and you want to know, how much cash do I need in order to be able to make this sale happen? So a little thing that you need to know if you've not bought a house before, even if you are getting a loan and not paying cash for the whole purchase of the house, you will still need cash in order to get to the finish line and do everything that needs to be done to make the sale. So today, I'm going to talk about 5 kinds of cash that you may need as you work through the process of buying your home and becoming a homeowner. So, and stick with me to the end, because at the very end, I am going to give you a scenario where you can get into a house with only $1,500 or even less in cash out of pocket and still become a homeowner. So we'll talk about that scenario at the end, but let's start with the first type of cash that you need. The first type of cash you need is the down payment. So a down payment, that is cash that you need that goes directly towards the purchase price of the house. For instance, if you were getting a loan, a 90% loan, meaning that you're putting 10% down and your house price is $400,000, that means that 10% of that is $40,000. That would be the cash that you need to bring to closing to cover your down payment. All right, simple enough. Second type of cash, it is closing costs. A lot of people have heard that term, they don't know what it means. To put closing costs very simply, closing costs is cash that you bring to closing that covers expenses associated with buying the house, but not directly part of the purchase price. So if you're paying $400,000 for a house and you've got closing costs, those closing costs have no impact on what the actual purchase price of the house is, but they're expenses that need to be paid. And in fact, I did a whole video recently about closing costs, and I will put a link down below so that you can go check out that video if you want all the details about closing costs. So just to keep it simple, closing costs are things like your escrow account to set up for the bank that has your loan to pay for your taxes and your insurance. Closing costs would be things like your taxes that you're paying, your transfer taxes, as that money goes to the government for the transfer of the ownership of that house. Things like your settlement fee that your title company would charge you in order to prepare your documents and take you to closing. Your title insurance, all these things are closing costs. Go watch my other video about closing costs if you want more information about that. So the third type of cash that you need for purchasing a house, it is out-of-pocket expenses. So when you buy a house, there's some money you're going to have to spend in order to get across the finish line. The first and most important is your earnest money. Earnest money is cash that you put down after you go under contract that shows the seller you are serious about buying that house. So that earnest money is held in an escrow account, usually one of the real estate company's escrow accounts or the title company's escrow account, but that money is deposited in that escrow account, and you as the buyer, you could lose that earnest money if you don't do everything that you promised to do in the contract. And if your contract has contingencies, then that means if any of those things, like for instance a home inspection contingency or an appraisal contingency or a sale of home contingency, any of these contingencies you have that the contract doesn't go through if they're not met, if they are not met in part of the contract, you would get that earnest money back when you cancel the contract for the reasons you're allowed to in the contract. That earnest money is not additional funds you're bringing to closing. Any earnest money that you put down is applied to other funds that you are already bringing to closing. For instance, if you're making a down payment and you bring $1,000 earnest money, you now on closing day bring $1,000 less because that earnest money will go towards your down payment. Other out-of-pocket expenses that you can expect would be your home inspection. Home inspections are you hire someone to go look at the house, to look in the attic, to look in the crawl space, to check out the major items, your roof, your heat and air system, electrical, plumbing, and so forth. That is money that will be out of pocket that you don't get back. When you get that home inspection report back, you've paid that money and it is gone, whether you decide to go forward with that house or not. Another expense that almost everybody has, if you're getting a loan, that lender is going to want you to have an appraisal. The appraisal is where the lender hires someone to come and check out the house, check out the comps, and give their opinion of the value of the house. And again, many lenders are going to require you to pay that money out of pocket, and whether if the appraisal comes in low or something happens where you're not able to close on the house and that deal is canceled, that appraisal money is gone. You're not going to get it back when you go to buy another house. You'll have another appraisal and another fee. So those are your out-of-pocket expenses. Your most common ones are going to be your home inspection, your appraisal, and your earnest money. So those are the three main types that almost everyone encounters when they're buying a home. The fourth one is something that I encourage all buyers to have, and that is a cash reserve. So a cash reserve, it's exactly what it sounds like. You're going to have some money in the bank that you can draw on if there's a problem after you own the house. If you're a renter and you've never owned a home, something to keep in mind when you become a homeowner is that if there's a problem with the house, there's no longer a landlord to call to come fix it. It is on you to figure out how to fix that problem, and something that you've got to pay for. And I always encourage everyone to have at least a few $1,000s, maybe $5,000 or $10,000 if you're in good financial shape, but have that as a cash reserve to protect you from things that could go wrong with the house after you own it. I'll give you an example. If you spend all of your cash reserves and you don't have any left, and you buy that house, and let's say your water heater fails. Well, if you don't have any cash in the bank and your water heater is no longer working properly, that is a disaster. You're gonna be taking cold showers till you can save up enough money to get that water heater fixed or replaced. However, if you have a few $1,000s in the bank and that water heater fails, man, that really stinks. Man, that's an inconvenience, but it is not a disaster. You will be able to get it fixed and have hot water flowing once again. So the fourth one that we talked about just now is cash reserves. And then there is a fifth one that comes into play in markets where there is a lot of competition, where there's a lot of buyers competing for the same home, where prices are being pushed up because of that competition, and that is what's called appraisal gap coverage. An appraisal is one person's opinion of what your home is worth. The bank is going to take that appraisal and say, as far as they're concerned, that's what the home is worth. So for instance, as long as your appraisal comes in at or above your contract price, you're going to be good to go. But if the appraisal comes in below your contract price, now you have an issue that needs to be resolved. Let's say your home price, that your contract price is $400,000 and the appraisal comes in at $390,000. Well, here's what the bank is going to tell you. They're going to say, look, we would still love to do this loan for you and close, but here's what we're going to do. We're basing our purchase price on this $390,000 appraisal because that's what our appraiser said the house is worth. So you have $10,000 between $390,000 and $400,000 that you need to get with the seller, and you need to figure that out. So what happens is negotiations can open with the seller at that point. And then sometimes the seller might just say, I'm going to lower my price that $10,000. Let's go ahead and close. Here's where appraisal gap comes in. So sometimes if you're competing with lots of other buyers, that seller might say, look, if you don't pay this full price, I'm going to go ahead and sell this house to somebody else. So that the buyer, if you choose to pursue that avenue, you would have to bring $10,000 of cash in addition to any other cash you're already bringing to closing. You would bring that to closing to cover the appraisal gap between the appraised value and the contract price value. So that is the fifth type of cash that you may need in some scenarios. And now it's time for a completely unrelated fact that may only interest me. Did you know that 10,000 years ago, there were beavers the size of bears? As you were. Now I promised you that at the end, I would share with you a scenario, which isn't all that uncommon, where you could get into a house with $1,000 out of your pocket, maybe even less than that. So let's talk about that. So there are several loan types that allow the down payment to be zero, right? So if it's zero, let's talk about that. The VA loan, if you're a veteran and you are eligible for a VA loan, that's a zero down loan. There are also first-time homebuyer loans out there that are zero down. There are loans that go along with an FHA loan that are first-time homebuyer loans or down payment assistance programs that get your down payment to zero. There's also rural development or USDA loans that are also zero down. USDA loans, however, you have to buy in certain areas that are approved for USDA loans. So you've already gotten now, if you have one of these loan types, you have zero down, so no money coming in on that. Second part, closing costs. If you are fortunate enough to be buying a house in an area where you're not competing with a lot of other buyers, or you're fortunate enough to find a house that's been on the market for a while, you can, as part of your offer, ask for the seller to pay your closing costs on your behalf. If the seller agrees to that, it's an accounting thing where the seller, they're not going into their pocket and taking that money out before closing. That money is being deducted from their closing proceeds at the closing table, so they get their money. It's just less what you all agreed to for the closing costs. So if the seller agrees to that, you now have zero down, you have zero in closing costs. The third part now is your out of pocket. You have earnest money, home inspection, and appraisal. There are some lenders and some scenarios with certain loan types where you can get the appraisal to be part of your closing costs and not paid until closing, and that can be wrapped into the closing costs that the seller is paying on your behalf. So that removes the appraisal. If you're buying new construction, a lot of times you can buy new construction and not get a home inspection. Well, that would take that down to zero. Also, there are scenarios where maybe you're buying a house that has been under contract before and the contract has fallen out over inspection, and the previous buyer has shared the inspection with the seller and given the seller permission to share that inspection with future buyers. Well, now you have a home inspection that seller will share with you, that allows you to still have a home inspection but not have to pay the home inspection fee. Another scenario, sellers get the home pre-inspected and an inspector comes through, they check that home out, they give that seller that inspection report. Oftentimes the seller does a bunch of repairs, some or all of the repairs that were in that inspection, and they share it with all buyers who are considering making an offer on the house. If the house has been pre-inspected, here is an opportunity where you can look at that inspection report that was done by a licensed qualified home inspector, and now you don't have to pay for your own home inspection because the seller has already paid for it for you. Then there's other scenarios for people who like to take on a little more risk, where maybe the home is only 2 or 3 years old. As you walk the property, you don't see a lot of problems. And as a buyer, you decide it is worth the risk to make an offer on that home that does not include a home inspection, or maybe you're competing with so many other buyers that you decide it's worth the risk to make an offer on that home with no home inspection, so your offer will be more attractive to the seller. Now, I would caution against doing that unless you're a more sophisticated buyer, but if you choose to do that, that is another type of situation where you have no home inspection, and all that leaves you with is your earnest money. If you are buying a house and you're competing with other people, $1,000 earnest money in our market is oftentimes enough to make the seller feel comfortable. However, let's say the house has been on the market for a while, or you've got a builder who's selling a new construction house and they're comfortable with a lower amount of earnest money. I've seen people put down as little as $100 or $200 in earnest money and get that accepted, and boom, you now have that scenario. You now have a house under contract where you're going to go to closing and you've put down $100 cash out of pocket and you've become a homeowner. So there you go. Those are the types of cash that you need to know about if you are considering buying a home. We'd love for you to become a Borough Bro. The way you do that is you click the subscribe button on YouTube, and don't forget to ring that notification bell so you don't miss any of the great real estate content that we put up regularly. Also, if you are considering buying or selling in Murfreesboro or any of the surrounding area in Middle Tennessee, we would love to help. Give us a call on our real estate hotline, or text or email us, and we will jump right on it and help you achieve your real estate goals, because that is the mission of our company, to help people just like you to achieve your real estate goals. And I promise we will make the journey to that goal as easy and stress-free as possible.
Got the wallet pumped up, call it show button. Don't ever want show stopping. Got all them hoes watching. I'm always looking awesome, making moves and boss.